Good afternoon.
So, Jerome Powell came in today cutting the federal funds rate by 0.25%, but the markets dumped. This wasn't how it was meant to be. Surely we were meant to get cuts and then a market pump. So what's going on? Why did the crypto market suddenly sell off and, well, is continuing to do so over the last 24 hours? We're going to be looking at jobs data, more specifically what Jerome Powell said, but why people, in my opinion, should still be optimistic with a hint of bullishness for the back end of this year. If you want more of that, make sure you watch this video all the way to the end. But before, hit that like button and don't forget to subscribe. Well, let's get into it. So the Grey Wizard of Rates. When summoned on this card, all the bulls are instantly silenced and markets seem to just have this knack of taking a giant sell-off. Now, what actually happened was that, well, markets got spooked. We were expecting all of this good news, rate cuts, more than rate cuts, quantitative easing, beginning and everything else didn't quite play as favorably as we would have hoped. However, when you sort of peel the onion skin back, there actually is some really bullish catalyst that, well, Jerome Powell is talking about. So obviously today we did get that full announcement, and I'm going to leave a link to the full PDF for you guys to take a look at, which was basically the statement Jerome Powell read, and they cut rates by 1/4 basis point, taking us down to 3 3/4 to 4%. So not quite in the category that we'd like, but they also talked about the potential ending of quantitative tightening coming December 1st. Now, this is essentially where they stop buying back treasuries, stop buying back bonds, and, well, start to just accumulate and get ready for what we believe is going to be quantitative easing. Now, here's the kicker. Normally you come out of QT and you sort of have a pause that you allow markets to assess, and then you go into QE. Well, not the Federal Reserve. Without saying it, that's exactly what they're doing. In fact, they're rolling over and auction the amount of principal payments from the Federal Reserve holdings of Treasury securities maturing in October, November, the excess cap of $5 billion. They're also going to reinvest the amount of principal payments from the Federal Reserve's holdings of agency debt and agency mortgage-backed securities. They're basically going to start to pump money into the markets, which we definitely weren't expected. But that means, well, why did the market sell off? Well, the market sold off. Jerome Powell said that they weren't sure about a December meeting outcome. Basically, with the data restrictions with the government shutdowns, they couldn't rule out that they would pause. In fact, he referred to it as driving in the fog, in that if the fog is there, you would slow down. So we also got signaling of more cautious approach, which again, the markets didn't like. That's why we got the sell-off. This is in line with recent jobs data and, more importantly, what the job market potentially is going to look like. He also talked about tariffs, as always, and they're expected to rise further, potentially adding 0.2 to 0.4 pp to inflation on the short term. So let's dive into a little bit more on the jobs market. I talked yesterday in my update video of how much the jobs market was going to drive where the Federal Reserve went. And actually, without kind of saying it, that's pretty much exactly what Jerome Powell said. So look at US job openings versus the S&P 500. Well, the fact is that we've got Amazon cutting jobs, UPS, GM laid off another 200 with a target of cutting a further 1,800 people. But the S&P 500 is skyrocketing, breaking another all-time high and potentially even heading up towards a $7,000 range. That's up 17% on the year. Why? AI. Innovation using AI basically means they can lay off workforce while generating more profits for companies. When you have a look at the S&P, as I discussed yesterday, it's pretty much made up of the Magnificent Seven. The rest of the market, well, it's kind of pants. This at the same time as when you look at what QT is going to do, it's going to drive an even bigger wealth equality while injecting capital into the market. Think about it. If you can leverage debt more and easier for less, well, that's what people are going to do, buying crazy overvalued companies exactly like we saw in 2021. Now, for a morale standpoint or a morality standpoint, you kind of say, well, this isn't really fair. From a pushing the markets and particular risk on assets such as Bitcoin, well, this is another catalyst that could ignite us further into Q4. This while at the same time we see banks continuing to cut rates as a recession in their minds is around the corner. Now, this isn't strictly speaking true. This is all about repo debt, and I've got a full video coming out about that as I'm researching it deep so that you guys fully understand it. But central banks continue to cut rates. Why? Because they are over leveraged in terms of debt and the Fed hasn't got any money to bail them out. That's what the repo debt basically stands for. This century, only the great financial crisis saw more rate reductions in a 2-year period than what we have right now. Now, this doesn't mean we're going to recession. This doesn't mean that the bubble's going to bop. What it does mean, though, is it's a matter of caution, but at the same time could support macro and massive movements on markets. So how does this all play into the crypto market? Everyone told me we were going to go to the moon this week, and even I I thought we were going to be way more bullish than we are right now. Bitcoin struggling to hold around 109,800 to 110,000. Well, the reality is that people still talk about the fact that, well, this has been the longest and slowest bull market cycle top. Now, I know 125K felt pretty bullish, but if you assume based on previous markets, so again, 2011 to 2015, the 4-year cycles, you can see that, well, we are assuming we haven't peaked, very much behind where we should be in terms of a percentage growth. Does that mean that we've got more fuel in the tank? And does that mean that Q4, maybe even 2026 is going to play out? Well, let's understand what are some of the macro elements that are going to go into that. Think of this. Today, the Fed cut rates on the interest rate. Now, when we've had the S&P 500 at record highs, this is the 5th time it's happened in history. Guess what? For all 4 previous occurrences, the S&P actually rallied and finished higher 12 months later. Does the same happen now, or is this a completely different cycle? And when you kind of look at what's happening in the Bitcoin market, at the surface, you say, well, everyone's selling. The market's over. People on crypto Twitter are telling me it's done. But actually, you see accumulation like never before. Following the October 10th market crash, Bitcoin accumulation wallets have surged to over 760,000. These are sure proof smart money is buying. Don't believe me? Look at ETF inflows over the last 24 hours and over the last 7 days. Out of all of those ETFs under Ethereum and Bitcoin, you can see that there are massive accumulations going on. This is just from ETF products. This is before you even get into hedge funds and treasury companies as well. So the big money is buying. At the minute, it's retail, and those people that have been shaken out, beaten down, and told this market is over are the ones that selling, not me. I am very cautious about where the market is, and I'm looking at all the angles, looking at the trade setups, looking at the macro data that I do every day here on the channel, and I'm giving it to all our Discord members. Link in the description, by the way. If you want to get that early, you can just get a channel membership here. Click the button that says join. It's going to cost you about $8 a month. You're going to get access to our premium Discord, our trade bots, and everything else. If you want to get hold of that, join in. But this is a moment, in my opinion, in time. Is the market going to roll over? Macro doesn't say so. However, is the short-term pain going to still continue? Well, it feels like with Donald Trump meeting President Xi, that might give us some respite. But whenever we see this continuation of market push down, liquidations again around $500 million, then it's always going to be a challenge. But sometimes, just sometimes, that's when the best money is made. So let me know what you think of this in the comments down below. And as always, don't forget, hit the like button, share this far and wide. If you haven't already, hit that subscribe button, that notification bell. Make sure it's set to all so you don't miss a live stream, an upload video, and everything else. Till next time, thanks for watching, and I'll see you soon. Bye-bye.